KickStarter is a donation-based website. So what happens is if you are an entrepreneur raising money, you would either pledge. So I think Pebble Watch, I'm not sure if you guys have heard of it, but Pebble Watch, it was kind of a product that Kickstarter, that marketed itself on Kickstarter. So you donated X amount of money, and the founders were giving out Pebble Watches in exchange for it. And so that's how it works. It's actually free, or you actually get a product or a thank you note or a t-shirt or a coffee mug or something. So that's one model. The second model is just a regular crowdfunding portal for equity. So where you would raise maybe $1 million, but in return for equity in companies. And what we're doing is a little different from them, is we're giving people limited partner interest in our fund. However, a fund is a more diversified investment. So as an investor, investing in venture funds, if you're really a naive investor or a first-time investor, putting all your eggs in one basket is really risky. So what we do is we diversify the investments because we invest in multiple different companies. However, I think currently in the market, we're the best opportunity for accredited investors when it comes to investing in crowdfunding. I would say investment vehicles. First of all, is because everything we do spend time. It's not like every deal gets uploaded. For example, if you go to a crowdfunding portal, you pay $900 or something per month, and you are up there, but nobody has actually vetted that deal. You don't really know the terms you're getting. You don't really know if the valuation is correct, which is not the case with us. We do spend 3 to 6 months on due diligence and everything that we do, every investment that we make. So currently out there, I mean, maybe in the future we might have competition, but currently there is none. Except for other VCs and people that can afford to write a $5 million check. So I would say, so that's how we're different from other crowdfunding portals. We operate like a crowdfunding portal, which allows investors to get direct access in investments, which in a way, so for example, most of us, you and I might be invested in venture capital indirectly. So you invest in a pension fund. The pension fund is invested in a venture fund. But when you get returns, you actually are paying the middleman. You're actually, when your returns are actually getting cut off because you are going through a pension fund. And you're going through a pension fund because no other venture fund would take your $100,000. We're the only one that would do that. So I think in a way, for an investor, if you're investing in venture capital, or if you're interested in investing in venture capital, we're probably a better option versus using a middleman. And as a venture capitalist, I'll tell you, every time when we make an investment, that's what we look for, is somebody disrupting an industry. So we're disrupting the venture capital industry. We are disrupting it for better returns. We are disrupting it for freedom. We're disrupting it for better access. And that's what we look for. And we provide better service because we're very transparent and vocal, which is not the case with most venture capital funds.